All right, so this is Friday evening, 29th of Jan 2021, Mentorship Invest Meet. Every Friday we meet to discuss about the markets and investment opportunities lying in front of us. It has been an eventful week for the Indian equity markets. We'll take a look at it. A very warm welcome to all our Mentorship Premium new joinees. We will talk about what happened in the Indian equity market this week and what can we expect going forward, and then we will go into investment opportunities. So the weekly chart of Nifty has finally given us a meaningful red bar or red candlestick. We had an amazing breakout back here, 12,500 kind of levels. This was the breakout move which saw decent bit of quick volatility and then further move out, and now we have a confirmed well bodied negative candle, which means a sign of healthy correction. All right, no big deal. We had an amazing run from the lows of March 2020, and so these kind of corrections should be looked as an healthy one. No big deal. The big deal, more appropriate, is if we look at the daily chart, we will see that it has been one way over the last 6 days, and every intraday bounce back has actually been sold into. Any positive opening have been sold into. So the market seems to be in a hurry to sell. Why? Valuations were stretched, not just 2 weeks before, it was being stretched for quite some time. Sentiments were high for quite some time. So why? Probably, what are we expecting going forward from the budget next Monday? Are we expecting something? Does the market know about something which is coming up for which it is discounting itself? Maybe, possible, but barring those kind of events or news that's coming our way next week, what we have is a one-way 1,000-point correction from the Nifty. And it came exactly when all of us probably expected it the least. And it came to celebrate a euphoric kind of celebration when Sensex took out that psychological 50K mark. But the important question is, what now? Going forward, what should we do? A look at the 75-minute time frame chart of the Nifty futures. We have a double channel breakdown, which I had carried a write-up 3 days back. Not good news. Has led to a one-way fall down. Now, if I look at this entire rally that we had, this entire move, you will notice that a sharp sell-off did happen during this time. All right. And the highs which was taken out was close to that 13,800 level. And this is exactly where the index is right now. This should act as some amount of support. If you look at the kind of volumes, we had a kind of a high volume sell-off, you can call it a panic sell-off at the last hour of today's trade. This is the last 75 minutes bar over here. So I feel that the short-term bottom is nearby. I feel that the short-term bottom, which will lead to a bounce back better than this, is nearby. It can be from this level. We can expect this. I will not be surprised. Or even if the budget comes out with something not so positive, and even if the index slips down, I think from here on we should be closely eyeing a bottom, considering the amount of volumes with which the markets have sold off. Generally, with such high volume sell-off, generally leads to a bottom. These are panic sell-offs which leads to bottom. Now we have an event, so we should not completely ignore that. And keeping that event in mind, we will wait out the first couple of hours before the event actually is over. We'll be range bound, and then we can get some volatility during the budget speech goes on. But going forward, if you're short, trail your stop losses, protect your open profits, and if you want to go long, then keep your eyes open, levels in ready and stocks in place. One thing that I would like to bring your notice to is the fact that this is the stock charts, RRG charts that we generally look into. And one thing that you would like to note here is the Nifty is down almost 5% this week. Three sectors which have led this fall: IT, auto, and energy. And the least falling sector is the Bank Nifty. And right on top of it is your private banks, your PSU banks, your financial services, which is down 3.6%. So today, I think the Bank Nifty was up over 3%, where Nifty actually couldn't manage to post a positive close. So we are definitely seeing some clear-cut short-term outperformance coming in from the banks, the private banks. We've been talking about the PSU banks doing exceptionally well, and when they do well, the market should be really worried, and that's exactly what has happened this time also. So going forward, I think if the market bounces back, it is not a bad idea to keep an eye on something like a State Bank of India. We should. Let me sort this in terms of tail. Anyways, before I sort it in terms of tail, this is the weekly performance. Let me increase the length of the tail to at least 12 to 13 weeks, which is just like 3 months. And let's see how the tails behave. These are the leading sectors: your real estate, your metal, your PSU bank, Bank Nifty, financial services, small caps, mid caps, autos, and commodities. So these are all our leading sectors. FMCG, remember, we've been talking about for the last few weeks, saying that FMCG consumer can play a role. So let's keep an eye. I think going forward, this FMCG and I think consumer will look very similar. Yes, is heading towards the leading, eventually heading towards the leading. Eventually, not maybe immediately. Don't think that they'll start to shoot up from the next week. They will, they can, but eventually they will outperform, surely. So FMCG consumer, we've been talking about this for some time. You should definitely keep this in mind. Hindustan Unilever, ITC kind of stocks, Tata Consumer, Dabur, etc. Apart from that, financial services is okay. Financial services is also definitely right up there with the Nifty, with the Bank Nifty and PSU banks. So if we expect the Nifty to bottom out anytime soon for a short-term bounce back, once, let's say, whatever our honorable finance minister has to say, whatever we have to understand and make out, etc., etc., once all of those things are behind us, once the dust has settled, there might be volatility, generally some degree of intraday volatility. After all those things have settled, and if you're looking for a short-term bounce back, I think we should eye the PSU banks, the private sector banks. Within PSU banks, State Bank of India, please, nothing else. Private sector banks, we saw a decent move coming in from ICICI Bank today. Keep a close eye on Kotak Bank. That guy is deeply oversold and at very strong supports. HDFC Bank as well. Financial services, to be on the slightly on the safer side, let's look at FMCG and consumer durables. And we'd like to stay away from the IT for a little bit. Pharma and IT. Pharma is, if you look at the tail of pharma, is lagging for quite some time. It's been completely range bound over the last 3 months. Pharma is in fact the biggest underperformer, 4.7% gain only. So pharma, we can wait out a little bit. It is gaining momentum. It is going up. Does not mean prices will go up. It is gaining relative strength momentum. Once it goes into the improving quadrant, that is exactly when we will start to look into it again. But our focus for the upcoming leading sectors should be FMCG, consumer durables. Within the leading sectors, which can still show us some gains, are the banking and financial services. IT is something which has been weakening for some time, and it gave a big sell-off this week, biggest weekly seller, losing sector. And so we would want to wait out a little bit from the IT from a short-term perspective. Let's take a quick look at the sectoral charts with the help of stock charts. Bank Nifty has given us a decent bounce back. Now it's important to see whether it holds on to this or not. If the index bounces back, we feel that banks will participate, or else everything will continue to sell off. Auto has been exceptionally strong. It has entered a short-term oversold zone, strong uptrend, 1334 zone. We will look to initiate long trades mid next week, maybe, once the range contracts. Definitely worth keeping a close eye on Bajaj Auto, Hero MotoCo, and Maruti. Commodities, not as strong as it would have been, has fallen below the 34 EMA down here. We'll wait for it to contract. Consumer durables and FMCG, we've spoken about this in detail, but it will take a little time because of the length of the sell-off bars are quite long. The candles are very long, so we would want it to slow down. Energy is primarily derived or driven by Reliance Industries, which saw a very sharp sell-off over the last 4 days. Let it wait out a little bit. I think these highs, this should be your July, August, and late September last year highs. 1606, 16,300, 16,100, 16,000. So 16,000, 16,300 for the CNX Energy Index is where you find 15,989, this low of mid-December. So that previous highs did actually act as very good support. This is where it's coming down to. This is from where we can expect a short-term bounce back. Keep a close eye on Reliance. Short-term long trade. Financial services might behave exactly like the Bank Nifty. There's no rocket science in that. FMCG, as we spoke about, let's see if it finds some support close to that 32,500 mark. The view on FMCG and consumers is that they should pick up eventually. Just we have to time it. It's not the right time right now because of the range expansion. IT, as I said, will wait out a little bit. It had been an exceptionally strong trend, strong sector. It's given us one big 7% crack this week, so we'll wait out. There's no need to hurry in the IT space, I believe so. Media we generally don't discuss because it's primarily Z, PVR, and Sun. Metals. Now, metals has gone through quite a sharp sell-off. The way it went up, the way it came down. Hindalco, Vedanta, Tata Steel kind of stocks are all ripe for a bounce back, and I strongly believe that they will next week give us a move. So we'll keep a close eye on those. Short-term trades, mid-cap and small caps have been outperforming the market for quite some time. Pharma. Now, pharma spent a lot of time in this zone. If you can see this 11,000 and 12,600, that's exactly from where it found some support, and now exactly where it's back now. It is in our weakening, it's in our lagging sector because it didn't pick up the way it used to before. But this sector should not be completely negated. It needs a little bit more time, maybe a couple of months time, and we should get some good move coming in. So I'll quickly conclude the weekly take on the Nifty. That is, we'll wait for Monday's speech. We'll wait what's coming our way. Considering the way the index has sold off over the last 6 days, maybe the index is trying to discount something. This is something we'll get to know on Monday. But 13,800 or sub 13,800 is a level from where we can expect a short-term bounce back. Today's high is the bare minimum resistance that one should work with. Bare minimum. So we're looking at 13,984. Let's use 14,000 round figure. Is the bare minimum. Index needs to take out 14K and stay above it for any sign of bounce back towards 14,300. But I would be looking to go long, even if the budget comes out bad and it falls on Monday. I'll be looking for these opportunities to buy into for short-term bounce backs. Let's see what's in store for us. As of now, let's move ahead and talk about investment ideas that's waiting for us for our long-term portfolio.